Hello and welcome. This is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. In the program today, we speak to Finance Minister Sostin Gwengwe on the revised 2022-2023 national budget. And also in the program, exports continue to dwindle. We look at the consequences to the already volatile situation of the country, where Malawi is unable to generate enough foreign exchange. That's inside Business Time. Hello and welcome. This is Business Time and my name is William Kumwembe. In our main story in the program today, on Monday, the Parliament passed the 2022-2023 revised national budget pegged at 2.8 trillion kwacha. Ironically, this is coming at a time when induced budget cuts have been effected to most of the productive sectors of the economy while adding resources to consumptive sectors. Now, there's been debate to say, where is the country heading to in as far as development strides are concerned? Our journalist from Lilongwe, Daonga Sabola, caught up with Minister of Finance, Sostin Gwengwe, to find out how the budget has fared this far and what the future holds.
When you look at consumption, you'll be arguing things like salaries. There's no way you're going to reduce a salary of an employee, and you have no choice. You need to be able to provide for that consumption because people will need to be paid a salary at the end of the day. Then you have some other projects, for example, the projects to do with the special economic zones under the Minister of Trade, where I would want to have the Magwero, the Matindi developed. Not much traction the past few months, and we had allocated over about 1 billion Malawi kwacha for that project. The money won't be absorbed in the next 2 months or 3 months. Therefore, it will be like you're cutting development budget, but essentially it's about absorption. It's about our speed in executing some of these projects. So yes, you will see that there's some variation in terms of consumptive votes and also on developmental votes. It all depends on how we are rolling out these projects on the ground. If we are not quick enough to put these things on the ground, then the money will not just stay idle in account number one. It will have to be redirected somewhere to make sure that we are using our resources for the right things. We had planned for 10 billion increase, but we've ended up increasing our budget by 12 billion because there was one line which had its figure adjusted, and we're having an increase of 12 billion from the previous budget. But you should know that given the devaluation and our inflation rates right now, this may not really be an increase of the budget in real terms. So nominally, kwacha for kwacha, yes, there's a slight increase of about 12 billion. But what we're looking at in terms of the real term value, this is a shrinking budget, and we're doing that deliberately so that as a treasury do our part in controlling inflation, as the monetary side at the Reserve Bank is also using their own instruments to arrest the fast rising inflation.
Now, Malawi continues to import more than it exports. For instance, between January and October 2022, earnings from 6 out of the country's top 10 export commodities declined substantially compared to the same time last year. The question that has always been there is what needs to be done. Experts have weighed in on the options, saying that Malawi needs to work towards addressing its appetite for imports while maximizing our ability to export commodities with value addition. Now, our journalist, Chimwemwe Mangazi, has been speaking to some of the commentators to find out the way forward in as far as import substitution is concerned.
Among other export products, value for oilseeds and related products declined to $139.2 million from $147.9 million, while edible vegetables and related products earned $46.2 million from $56.4 million in the first 10 months of 2021. Sugar and sugar confectionaries raked in $23.2 million during the period, from $62.5 million in the previous year. Economic expert Felix Lombe, who is also National Program Coordinator for Transforming Agriculture through Diversification and Entrepreneurship Project, says reduced demand for the commodities coupled with stiff competition at the global market may have triggered the performance.
It is not something very surprising because we all saw the trend coming. Essentially, the decline in traditional export commodities in terms of the revenues can be attributed to 3 or 4 reasons. Number one, the demand out there obviously is going down. Number two, it could be that we are not competitive on those particular commodities. Number three, it may also imply that as a country, we are not producing more as we are supposed to produce. But finally, it may also mean that as a country, we are not able to trace our exports. This is largely so because of reasons normally to do with the transfer pricing. This is a very major challenge in Malawi. It is a challenge that we've discussed for a very long period of time. The solution doesn't seem to come quickly at the moment. So those are essentially the reasons why we have seen that traditionally our exports or traditional commodities that we used to export have gone down, and it means there is something that we can do around that. Essentially, what we can do is to reverse the trend, increase productivity, enhance our productivity, diversify so that we produce outside what we have already been producing. Diversification can be vertical, where you add the value, you do some value addition, but it can also be horizontal, where you bring on board more commodities. But at the same time, it may also imply that we need to enhance our ability to follow what we are able to export. So these are some of the interventions that we can undertake at the moment to reverse the trend. We see we are likely going to see the changes because there are some commodities that we have done fine. I think edible vegetables, I think we have registered an increase in our exports revenue, not because there is any deliberate mechanism, no, but because out there there are changes with the dietary requirements of people. Therefore, whatever we are producing, either on small scale or unintentionally, is finding a market outside. So we do expect an increasing trend because when you export something or you grow something and later on you discover that it is on high demand at the international market, obviously you make more money and you are more motivated to produce more. So we do see a trend. We do see a continued trend for those commodities that are not doing well at the international market, those commodities that are not fetching good revenues at the international market, because this is going to be the reality. I mean, you don't expect any reversal on tobacco. I'm sorry to say this. And at the same time, we also don't expect any reversal on some of the legumes, especially those legumes that seem to be facing a lot of competition at the international market, such as pigeon peas.
International trade economist Maurice Yasia rated the exports performance as shocking, saying it could have been triggered by foreign exchange shortages.
Malawi as an economy, we are still not doing better because as according to the report, which I'm sure you have seen from NSO, is that exports have reduced by about 8% in the same period, which means we are not doing better. Instead of increasing exports, exports are reducing, which is not good for an economy like this, which is in dire need of forex. So the impression is bad, I can say so. I think the major contributing factor has been the lack of exports itself, or in other words, which has been perpetuated by lack of forex, or in other words, the forex issues or the exchange rate issues that we have been facing. I think we currently do not have the sound macroeconomic policies, including the exchange rate policy, that can sort out these issues. So it appears that our economy also relies on imports to export. So some of the raw materials that we need to produce export products will also rely on raw materials to be imported from outside the country. So it's like there are linkages between imports and exports. If we are suffering on imports, exports will also suffer. So unless we need to sort out that problem. That is also coming from a simple demand and supply analysis. So quality is a determinant of demand. So it means if the other countries are producing better products like ours, it means a buyer is not stupid. He's going for the higher quality products. So it's going to substitute with our products. So yes, quality matters. I think we haven't done better on that in improving the quality of the products that we are exporting outside, as evidenced by tobacco products. Year in, year out, when buyers are coming, they are always complaining about the quality, even sometimes denying to buy some of the quantities. So yes, quality is very key in ensuring exports in a country. It's high time that as an economy we accept that we need to export more. So that realization will help us to start innovating in terms of what should we do. So the government should be very serious with how it can assist the local producers to have high quality products. So we need to invest more in maybe agriculture, the policies that should encourage exports, because even the policies around exporting are very prohibitive in Malawi. You have to fill so many forms to export. So we need to be serious that we really need to export, and then bring in interventions and necessary policies, even if it means working around the interest rates, which are very high, that prohibit investors to produce products that we can sell outside. So investment is still a challenge in the country. So we need good policies to sort out the problem of exports.
Overall, the country's exports reached $750.3 million, representing an 8% drop compared to $818.7 million realized during the same period last year.
Remember, this is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. We'll be right back. Remember, this is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And moving on with the program, the Common Market for East and Southern Africa, COMESA, has emphasized the need for Malawi to harmonize the competitive policies in the country with those of other countries to ensure competitiveness of local commodities and products on the international market. This comes as Malawi is part of the African Continental Free Trade Area, a pact or an agreement which is working towards facilitating ease of trade among countries within the African continent. Now, this is coming at a time Malawi's appetite for imports remains elevated compared to ability to produce enough for exports. An expert from COMESA, Davidson Sobuza, says Malawi can do much far better if it puts in place some unique measures that are competitive and ideal for doing business. Our journalist Chimwemwe Mangazi has the whole story in this report.
COMESA Competition Commission Acting Manager for Enforcement and Exceptions Division, Sibonselizulu Maseko, says there is need to make Malawi's competitions policy responsive to integration development.
So what is important to understand is that the Africa Free Continental Trading Area is going to open the continent to trade, and is going to open Malawi to trade from beyond just the COMESA neighbors. And in this case, we need to make sure that the competition policy is responsive to the needs of the member states and to the needs of the continent. So as a country, as a bloc, as a region, we need to ensure that our policy will make sure that it enforces against such anti-competitive behavior like abuse of market power. When you open up Malawi to trade from the continent, you are saying that the traders in Malawi are going to compete with bigger companies that are located in other countries. And so when we go into the negotiations for the competition protocol, we need to make sure that there is an enforcement space that will make sure that anti-competitive practices such as misuse of market power will be sanctioned and enforced against.
One of the directors for the Competition and Fair Trading Commission, Zach Kawalala, says already the local authority relates with the COMESA Competition Commission, whose offices are housed in Malawi, and can always take advantage to be up to date on integration developments.
Maybe on the area of awareness, we still have a long way to go. As a commission, we've tried within the capacity that we have. We interrelate with COMESA when there is especially maybe measures that are coming in between nations. So COMESA would always have an interrelation on that. But as well, the advantage Malawi has is currently Malawi houses COMESA. So the office for the COMESA Competition Commission is actually housed here. So we can take advantage of that. Maybe we have not used it so much to our advantage, but it's something we are learning from. And COMESA has been helpful in almost like nurturing us as a growing commission. So that's now you're going into the Ministry of Trade. I'm not sure how competition and fair trade comes in, but the whole issue for the African Free Trade Agreement is to make smooth inter-country trade, I believe. And tariffs should drop, and therefore pricing should start to come down. That one, I think the governments are the ones that are more at work on that, other than us as a local commission.
The African Continental Free Trade Area officially entered into force on May 30, 2019, 30 days after the deposit of the 22nd Instrument of Ratification.
Now, moving on to other business news, the Greenbelt Initiative says it is working on programs that would ensure to position Malawi as a competitive country in as far as agricultural production is concerned. This comes as Malawi is attempting to diversify its production base, at the same time attempting to commercialize the agriculture sector. Llewellyn Mpasa has the whole story in this report.
COSAM said through land consolidation, irrigation combined with smart crop management practices, the scheme anticipated to harvest 500 metric tons of maize 3 times in a year.
We indicated that the place we're going to change. There will be production this year. This is exactly what we've seen now. All we wanted as a body was to make sure this land starts operating the way it was designed for, as a scheme. So in the background you can see the tractors are there on the ground. The land has been tilled like this, so we are ready for planting. All the farm inputs that are needed here, they are ready. So we are developing 100 hectares of land. That to say we're going to plant maize here with an estimate of 500 metric tons of maize this growing season. Another thing that we are happy about is that the irrigation works are also going on. There is good progress, and again, this land will be supplemented by water from the irrigation system. With that, for example, I'm sure that by December, this land is going to produce crops 3 times.
Secretary for Nyamitambo Association and Anchalo Greenbelt Authority Limited, Petro Vumbe, hailed the government for the project, which he said will go a long way in ensuring that people are food secure and that they are empowered economically.
We as the farmers, we are expecting to harvest at our land 3 times a year. That's what we are expecting. We had some problems behind just because we had a poor irrigation system. But now, this funding is coming on our land. We are seeing the progress.
The Greenbelt Authority was established with a mandate to champion large-scale commercial irrigation through efficient use of land and water resources in order to accelerate socio-economic transformation of the country.
Well, that interview also brings us to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Always remember, if it doesn't make money, then it does not make sense. Stay safe and bye for now.